Hello and welcome to Money Markets and More, coming to you from the graveyard. Today we ask, what does the next decade have in store for investors, and what does it mean for your money? So I stumbled across a GavCal research daily comment over the weekend with a really interesting table that I thought we could discuss today. And GavCal Research, if you don't already know it, it's a financial research firm that provides analysis and insights on global economies, markets and industries. It was founded in 1999 by Charles Gave, Anatole Kaletsky and Louis Vincent Gave, and it's headquartered in Hong Kong. I'm about to take a step down, and it is, the internet tells me, known for its holistic approach to analysis. Holistic is one of those corporate buzzwords that I never really knew what it meant. Again, the internet is our friend, and in the context of financial analysis, holistic analysis refers to considering a wide range of factors such as economic, political and behavioural in order to gain a full understanding of market developments. It is a way of looking at the big picture, in other words, rather than just focusing on specific details or individual factors. So why don't people just say big picture? But that's the equivocal financial world in which we live. In any case, Louis Vincent Gave's report is a compelling one, and he describes how, roughly, every decade or so, financial markets fall in love with a new narrative. It's something I've observed, we've observed, here on this channel in my column. 70s were all about precious metals and energy, the 80s went to Japan, the 90s saw tech stocks take over, and the noughties were all about natural resources, and the tweenies and growth in China, and the 2010s were all about tech. So, what about the 2020s? What are they all about? Well, Gave suggests that there will be one of three core ideas to each narrative. Here are his three new ideas: the opening of new markets to capitalism, Ricardian growth; technological breakthroughs, Schumpeterian growth; or the fear that in the coming years there will not be enough for everyone, the Malthusian constraint. And each time the narrative is persuasive and rooted in some truth, which is why it takes hold. But by the end of the cycle, valuations reach such extremes that they no longer make sense. A bear market sets in and a new narrative takes over. So asset allocation is everything. All you have to do is shift from narrative to narrative. It's a lot easier said than done, of course. But here is Gave's humdinger of a table. And you can see how clearly the narrative has shifted with each decade. By the end of the 1980s, 6 of the world's largest 10 companies were oil companies. By the end of the following decade, just 1 of them was. By the end of the 90s, 8 of the world's largest 10 companies were Japanese. By the end of the following decade, just 2 of them were. At the turn of the century, 7 of the world's largest 10 companies were tech-related. By the end of the following decade, just 2 were. At the end of the noughties, 7 of the world's largest companies were natural resource companies. By the end of the following decade, not 1 was. And 2021-22 seems to have marked another turning point. The COVID rallies in tech were the final spike in an amazing bull market. These are all huge companies that make the foundation on which portfolios are built, but how many of 2021's top 10 will be there in 10 years' time? Not more than 2 or 3, I wouldn't have thought. You have to hand it to Microsoft. It's been there 3 decades running. Perhaps that's because in many ways, as much as it's a tech stock, it's also a patent holding company. Apple's also made the list twice. Now, so mighty are these companies and so entrenched in their monopolies, it's very hard to envisage them not being so mighty in 10 years' time. But this is the world of tech, New inventions can come along that quickly make old monopolies redundant. In that regard, I've just been playing with a new OpenAI chatbot that my son, who's at university in Bristol, put me onto, and it's extraordinary. It can write essays, it can wrote a blog that I'm now going to use on my, a biog that I now use on my website, and it's a better biog than I've ever had, that I've ever written about myself, I should say. What might the impact of it be on, say, Google? Who knows? Now, Gov says that waiting for the Fed to cut rates and being long the likes of Nvidia or Alphabet makes about as much sense as sitting in Tokyo in 1992 waiting for the Bank of Japan to cut rates in order to buy the Industrial Bank of Japan. In short, we are in a transitioning phase. What does the next decade have in store for us? Elsewhere, Howard Marks of Oaktree Capital also argues that we are in, as he puts it, a sea change, only the third we've seen in his career, and that the model of success for the previous cycle is not going to work this time around. He suggests that the high leverage, asset owning, low interest rate, low yield, low inflation models of the last cycle are behind us. The general landscape is much less optimistic. He argues that stimulative rates are not coming anytime soon and that the base rate will remain in the 2 to 4% range. We are now in what he calls a full return world, not a low return world, and investors can get good returns from credit yield instruments, high yielding bonds and so on. If you're interested in bonds, by the way, check out the work that Dr. John has been doing on my Substack. What worked before will not work now. What might work now is something that hasn't worked for a long time. Commodities could be winners. Gav, meanwhile, suggests emerging markets in commodities. Even with a China slowdown, lockdown, the Fed tightening and a surging US dollar, the S&P Goldman Sachs Commodities Index has still returned 27%. But this will be an even better story when these forces reverse, when China opens up and when the Fed stops tightening and the US dollar rolls over. I should say the GSI has returned 27%, mostly on the back of energy. Metals have been a rather different story, but with those three reversals in place, weak dollar, no more tightening and China opening, the stage is set for metals. What do you think the next decade's narrative is going to be? It's there, percolating somewhere. Malthusian, Ricardian or Schumpeterian? Thank you very much for watching. I'll be back with another podcast, another vlog very soon. Goodbye.